Hello and welcome to our monthly real estate update for Chicagoland area and DuPage County. This is for the month of June. So today I'm going to talk in depth about some of the key factors that are driving today's market. And this is important for both buyers and sellers to understand, because you want to know what conditions you're facing when you either put your home on the market or you're shopping for a new home. In any market, there are multiple factors that combined move a market in a certain direction or create the current market conditions. Now, all these factors don't have the same weight and don't have the same weight at the same time. Some factors play more prominently during certain phases of a market, while other factors are more prominent at other times. Sometimes very different factors can come into play at different times, but actually create a market that looks similar to what it was, even though it's actually being driven by a completely different set of circumstances. And this is no different for the real estate market. If you've been thinking at all about putting your home on the market, or if you've been thinking about buying a new home, you've probably heard that in the real estate market there is low inventory. Well, what does this mean exactly? Low inventory simply means that there are more people looking to buy homes than there are people who are selling their homes. So there's a mismatch between buyers and sellers. And this, as well known, has created a seller's market. And this has been the conditions for the last several years. As with anything that's in demand, if there's a low volume of it or a low inventory, and there's many people looking to buy that item, prices go up. And this is what has caused prices to continue to climb, even in the current economic conditions, where normally rising interest rates, you would think that home prices would be declining, and they are not. So as I had stated earlier, sometimes markets will act the same or appear to act the same, but they're actually being driven by completely different factors. And this is really the case with the real estate market today. 2 and 3 years ago, we had COVID, and people spent a lot more time in their homes than they usually had been. They weren't going to the office, they were working from home, everything was shut down, there were really nowhere to go. So people were really spending a lot of time in their homes. And people started to realize that, I need a home office. I need more space. We need a rec room or a finished basement, place for the kids to go to get away from us and us to get away from them. So that really helped to drive the housing market. We had a lot of people who were living in apartments. Now they're working from home. Apartment's great when you can go out every night, or you're at work all day and you come home. Not so great sometimes when you're in that place, basically 24/7 on lockdown. So people realized that they needed more room. So there were a lot of first-time home buyers coming into the market. There were a lot of people looking to upgrade. And this drove inventory down because there were a lot of people looking for homes. Another thing at the time is that mortgage interest rates were at rock bottom. When we had rates down into the 2s, and so there were a lot of people who normally might be priced out of the market, could get a mortgage for very low interest, and had a lot more buying power. Now, we would take clients out looking at homes, and houses that were on the market for one day, by the end of that day, had 13 offers, way over asking, all kinds of contingencies being dropped. So it was, it was just a crazy market, to be honest. And so now fast forward to today, and at least for the last year, maybe a little longer, the market still seems, at least from the outside, somewhat the same. Low inventory, housing prices are again climbing. They did take a little hit for, maybe the last year, maybe 6 months ago, they started coming up a little bit. And so you would think conditions are completely different now. See, high interest rates, normally when interest rates go up like that, housing prices go down. You take a lot of buyers out of the market, less people looking for something, prices are going to come down. Well, there are less people shopping for houses right now because high interest rates have knocked a lot of first-time home buyers, especially, out of the market. But there's a lot of people sitting on 3%, 2-point-something% mortgages or refis that really aren't too keen on going out, moving up in a home, or downsizing to a home where you're going to be taking out 6.5-7% mortgage. So interest rates really are the key factor right now driving this market and creating the low inventory situation that we have, even though it's kind of counterintuitive. The Fed, after their last meeting, had made some noise about there's going to be a pause in interest rate hikes, and some people took this and kind of extrapolated that there would be interest rates would come down at the end of the year. I don't know that that was ever realistic, but recently they have been talking about, maybe there's going to be a hike, 25% basis point hike this month, as opposed to a pause, and there could be something after that. Looking at inflationary pressures, we had some retailers reporting last week, Target and Kohl's, their purchases at these stores are way up. Consumer is still out there and still active. Inflation is much higher than Fed's target. It's also going kind of in the wrong direction, so it's likely that there's going to be more action, which at some point it's going to take its toll on the housing market, and you're going to see a lot of people out, and you could see home prices coming down. But the way things have gone recently, what you think will happen is probably not what's going to happen. Until we start seeing some interest rate reduction, expect the inventory situation to stay the way it is. And even when it does come down, now they're going to have more people coming into the market. We'll see what happens there. Probably people will be easing into the market because they're not going to drop rates very quickly. So you'll start getting more buyers in, but you won't get a flood of new buyers, and you will have people who are now comfortable in making a decision to put their home on the market. So we'll have to see. So please keep an eye out for our weekly market updates, and if there's any subject that you'd like to see covered, either in more detail or in a shorter form, please leave a comment and we will address those issues, and we will see you again in July.